What's up, traders and investors? Will back here with another one. Well, we had a little red day on the markets today as most of our major indexes pulled back. The bulls were not able to keep their bounces going. And after a nice gap up open, we kind of sold off for the remainder of the day. So once again, we'll take a look at our major indexes. We'll take a look at our major technology stock plays. And for my portfolio, you can go watch yesterday's video. No change for today. So we're going to make it a bit of a shorter video. So let's get into the charts right away, guys. Gonna be juicy. NVIDIA earnings tomorrow. Keep an eye on that. So SPY here today, guys. As you can see, we are down 0.27%. And QQQ actually not down that much. 0.14 almost. Was positive for a good portion of the day, but lost it here at the end. As you can see on the heat map here, guys, bit of a mixed market here as we did have a few technology names outperforming, but once again, dragged down by others, such as NVIDIA giving back some of the gains that we had yesterday, and healthcare and financials still struggling, guys. So we will need their support if we are to turn around these daily downtrends on the SPY. Keep that in mind. One day relative performance, you can see consumer cyclical made up pretty much all of it, and that is only due to pretty much Tesla and a few other names being up today. And the rest, however, were pretty much flat here. Not very much outperformance here. Fairly mixed day on the market. You can see, though, financials and healthcare really struggling. And you can even see it here on the 1 week relative here. Healthcare down considerably and financials even more. And guys, those are our two heaviest weights in the SPY after technology. So if you want to see the SPY be able to recover and really change these daily downtrends to daily uptrends, we're going to need their participation. So without further ado, guys, let's get into some technicals here. Right before that, I want to bring up two little earnings plays that we did have today, right? So earnings plays for the day. Most important ones that we're going to cover here is Toll Brothers and Dick's Sporting Goods, right? We also had a few others here. And then tomorrow, obviously, massive day here. NVIDIA and Autodesk are going to be the ones that I'll be focused on more. And then we have a few Canadian banks here lining up for Thursday. That'll be good for me and anybody else exposed to Canadian banks. So let's go over these very, very, very quickly, yeah? So Toll Brothers first, right? So Toll Brothers is one of the biggest home builders in the US. The other one being D.R. Horton. Now, I'm going to show you these two charts, and you'll see this is D.R. Horton for the year, and this is Toll Brothers for the year. Very big outperformance by the home builders. And you see right here, guys, that they did have a very good earnings today. They actually beat on EPS by a significant margin, 32% almost, and beat on revenue by almost 12%. And if we go through the little rundown here, right, you'll see that over the last 4 quarters, the company has surpassed consensus EPS 4 times. Why though, right? Well, what's happening here, guys, is the fact that they've outperformed the market. There are no easy answers to this key question, which is hilarious, right? But essentially what they're saying, guys, is they're saying that because that rates are so high right now, between 7%, anybody who previously bought a house or has a mortgage below that is now reluctant to sell. So with the unavailability of old homes on the market, people are looking to the new home builders to fulfill that demand, right? So that is pretty much the gist of essentially this whole article here. It's pretty much replacing one thing with another, right? Since there's not that many old homes on the market for people selling their homes, because where would they go to live, right? If you sell your home and you're forced to purchase a new home with higher financing requirements this time around, what are you actually going to substitute to? But then there's a whole base of new home buyers that still want to buy homes, that haven't bought homes in the past 3 years, and they're now looking to your new home builders for those that lack in demand, essentially now. So the housing market, guys, still not coming down as much as people would have expected here. Still not that inventory buildup that we're looking for here. So bit of a sticky situation here in terms of the real estate market. But if you want my opinion here, I do think that they will be coming down here over the next 6 to 12 months as we get slight inventory buildup here. And the home market kind of self-regulates itself in that respect, because when rates are high, guys, the prices of homes always tends to come down as people who are listing their homes, right? The people who are trying to buy the listed homes don't qualify for the same prices that we've had in the past 2 years. So prices will come down and then inventory will build up, and eventually we will get a new equilibrium lower. And so that's pretty much number one here. And our second earnings that I wanted to cover here, Dick's Sporting Goods. Dick's Sporting Goods, guys, if you don't know what they do, right? They basically sell outdoors and sporting equipment, right? So camping equipment, sporting equipment, stuff like that. Today, one of their worst days on record, 24% drop after they had a brutal miss on earnings, 26% miss on the EPS here, and slight miss on revenue. But this was one of our biggest success stories pretty much since 2020 for obvious reasons, right? People going outside more, trying to substitute travel with doing more things at home since they weren't able to travel. And now it's kind of catching up to them. So the article here that covers it, it'll say very, very, very clearly why, right? So the sporting goods chain slashed its profit targets for the year after missing Wall Street's forecast for the second quarter. Sales slowed after a pandemic-fueled surge for outdoor gear, leaving it with excess inventory, right? So here is the most crucial portion of the article right here. Consumers still have good savings, but they're being more judicious in how they spend. More of their money is going to services and experiences, which is a common theme that we've seen here over the last year in terms of the travel boom, right? People have purchased all the things that they wanted to purchase. They've also done all the renovations that they wanted to do in their backyards and whatnot. And now they're seeking to replace that with travel and experiences instead. So unfortunately, Dick's Sporting Goods diminishing guidance for the rest of the year. And it does seem that this stock's post-pandemic rally is pretty much coming to an end, but this stock always has had really, really good fundamentals. They have good growth. They're always opening new stores. Not a pick for me right now. I much prefer one of their more niche rivals in ASO. But even ASO, guys, you can see how well they've performed here since 2020. And now they are kind of setting up here for monthly consolidation. So those are two that I'm kind of keeping on the back burner, but they will need to fall a lot for me to be interested. So getting into SPY right away here, guys. SPY, right? What were we looking for yesterday, guys? The size of the bounce was crucial. I was telling you guys, keep an eye on the 12 EMA. Didn't quite make it there on the SPY chart, but as you can see here on the futures chart, we actually did. This was today's day. This is pretty much after the close, 6 p.m. Eastern, right? So you can see, guys, on the futures chart, we did actually get there. Not quite on the actual SPY chart. So have the bulls created enough space? Well, let's zoom into the lower time frames here. You guys can see hourly uptrend is still maintained. They're holding steady, holding above these moving averages as well. So tomorrow, guys, is going to be absolutely crucial for the bulls. If we flush today's lows, guys, we're going to lose the hourly uptrend, and quite possibly this will be a temporary end to the size of the bounce. And then we're going to look, are the bears going to come in here roaring and flush these 433 lows, or are we still going to be able to set up for the daily trend change? Not enough of a bounce, in my opinion. I would have liked to see it get a bit higher than that to really give themselves enough space, but we'll take this one day at a time and we'll see if the bulls can play defense here, create a potential double bottom, or if they're going to stop slightly short and potentially move up. But our most likely scenario was always lower high for potential lower low until this daily downtrend is reversed. The proof is all on the bulls, guys. QQQ, same thing, but QQQ actually bounced a decent bit higher this morning before starting to pull back here. So we do have some decent space to work with here on QQQ. Let's establish that right now. I'll tell you guys the levels, right? So here on QQQ, we still have about 2.3% to the downside that we have to work with. But I do like the size of this bounce on the bulls. The problem, guys, is that QQQ has been our lead bull throughout this entire bounce. You'll see it when I bring up XLF. XLF doing nothing. XLV doing absolutely nothing, right? So we can't only count on the technology bulls. That is the problem that we're having with SPY right now, which why I would not be surprised, guys, if we do roll over on QQQ and roll over on SPY. You can blame our other sectors for not playing along after technology's bounce, right? So technology still just looking for a lower high. Anything below pretty much 371.24 is going to be that lower high. Now remains to be seen, are the bears, when the bears get their turn, are they going to flush our 355 lows, or can we set up for a potential daily trend change? We're going to take this one day at a time. Obviously, if they keep flushing the lows here, well, your weekly consolidation is just still underway. XLF financials doing absolutely terrible on the day, guys, as the downgrade threats continue to persist amongst many financial names, right? That is the only thing that's bringing them down right now. XLF playing with a key level right now. This green box right here is very big support. If we lose this, guys, we're still looking for any higher low, anything above 32.55, right? To be our weekly higher low. But now bears are cutting significantly into this move, guys. If you put the fib up on it here, I don't really like how deep they're coming into this move, guys. You can see that we're through the 618 level. So we're battling right now in this whole support zone, but I don't like it, guys. Usually when the bears take back too much of a move, you could end up potentially with a tightening range, which kind of negates your capacity to V-shape and really bring the weekly move to the upside here. So we'll take this one day at a time, guys. But as of now, bulls very, very weak on financials. Eventually, the daily downtrend is now continued. Eventually, we need to see the bulls recapture and reset that daily uptrend. XLV Healthcare, same thing, right? Look at the size of this bounce, right? You compare the size of this bounce and the no bounce on financials to our nice bounce that we've had on QQQ, it's like looking at black and white. It's two completely different things, right? So really not satisfied on the bounce on healthcare bulls. You do not want to see them lose 132.10. That's the line in the sand level for me. I want to see them continue to tighten up this range. But if we flush these lows right here, guys, it will potentially be a weekly downtrend confirmed. And that's not looking good if you want to see in the next quarter here for your potential upside continuation, which is also monthly continuation too. So we're coming up on some very crucial levels on financials and healthcare. If the bulls want to play defense, guys, it is now, or else these charts are going to take significantly longer to reverse into clear weekly uptrends once more. If we lose these levels, the bulls will have a lot of work to do to recapture them. So we'll keep an eye on this one day at a time. IWM Russell, same thing, very, very weak bounce, guys, not getting any lift on these bounces at all. What you need to see, guys, daily downtrend is confirmed. At this point, we're just expecting a lower high, right? Compared to this, like, look at the size of this drop, right? Anything under 194 is just going to be for a lower high for potential continuation to the downside here. Not satisfied with the size of this bounce. Growth stocks, unfortunately, getting beat down pretty hard as of lately. What are we looking for on the weekly? On the weekly, anything above currently 180.2 is still just a weekly lower high, but same situation as XLF and XLV, guys. When the bears take back so much of a move, the best case scenario for the bulls is a tightening range. The worst case is reversal and weekly downtrend confirmed. At that point, guys, we will be once again in monthly consolidation here. On the monthly, we do have some space, anything above 169, just for your monthly high or low. But it's time for the bulls to show up and see if they want to save these levels. Big area of support down here around 180. Dow Jones names also giving back a little not very good bounces on your value names either, right? So still on the weekly, anything above 33.7, looking for your lower high, still battling with this whole area of support. But if we lose this, guys, it's not going to be pretty, especially if we come down to your weekly lows. It's going to get very tough for the bulls to V-shape this, right? The best you can possibly get is a tightening range if they keep taking back so much. We're going to take this one day at a time, but still, we're looking for our daily bounce, and as of now, the daily bounces are not started on pretty much anything. QQQ is carrying this entire rally to the upside, right, guys? So we need to see the value bulls start kicking in soon, because if we come down here, 33.7, guys, it's going to get dicey, right? So need to start seeing some good, powerful moves up here from the bulls on most of our other sectors other than QQQ. Bitcoin doing absolutely nothing. Once again, testing our most recent lows here, guys, down to 25,500, right? So once again, Bitcoin bulls, very, very, very weak. We are just expecting a daily lower low. Daily downtrend is very well underway right now. Our next target, if we do drop, guys, is going to be all the way down here. Your most recent low here, 24,500-ish. Playing some good defense here with the 200 weekly MA, which is that green line right there, but really not a fan of crypto right now. I'll keep saying it, guys. The bulls have so much work to do to reverse this to anything meaningful right now. As of now, we are just still in weekly consolidation and bulls with a lot of work to do. Apple. All right, so Apple here. Decent bounce going on Apple, right? So we were looking for them to get as close as possible to 179.72. The bulls making a decent little attempt at it. All our technology stocks are having really good bounces. Now, Apple will be crucial over the next few days, right? When this daily bounce tops out, aka when you lose this 4-hour upswing here, and the first sign of it is going to be your loss of your hourly uptrend, right? Now, bulls struggling today to push higher highs. So when we lose the hourly uptrend here, when it goes into an hourly downtrend, you are going to measure whether the bulls can hold up and create for the daily trend change. Or if the daily downtrend continues, I like the size of this move that the bulls have put in back. I'd like to see one more green day to really give us the best opportunity possible, but we are currently looking for the potential of a daily trend change. Apple making some decent progress in that. My sweet spot still 175 down to 170 seems to be holding up good for now, but if the market falls apart over the next week or 2 weeks, then you are definitely just going to continue with your lower highs and lower lows, and your daily downtrend will continue. And I will not be surprised, guys, because it's up to the bulls to change that, right? Until they change that, then the most likely scenario you have to be expecting is lower lows. AMD, guys, same thing, giving up a little bit of our bounce yesterday here, actually closing below yesterday's open today. So AMD had a very decent bounce going, but we were always looking for a lower high. Anything below 113 was just going to be for a lower high for potential retest of the lows. Now, if the bears break 101.71, well, it's not going to be surprising. Your daily downtrend will just be continuing. My sweet spot all the way down here, 104 to 98. Obviously, I am looking to open some positions here if we continue to trail down into this area. Keep in mind, though, NVIDIA earnings are going to be absolutely crucial for the entire semiconductor space, guys. If NVIDIA does poorly, I would stand to argue that it's very possible that Thursday morning we get AMD flushing the lows here. If they do well, you might see AMD pop up. If we can get as close as possible to 113 here, really sets up nicely, gives some good space for a daily trend change. So we'll be taking this one day at a time on AMD as well. Amazon also bounced, kind of topping out in this area, really struggling with this whole area, right? This whole area, which is now resistance. The 12 EMA, this yellow line, is now resistance. This little box right here is now resistance as well. So it's proven to be tough for the bulls to really push that. What are we in? Daily downtrend, right? Keep an eye on the size of this bounce. When you do lose your hourly uptrend, haven't lost it so far, right? But tomorrow, crucial day, if we lose the lows, right, you are back in an hourly downtrend. It'll most likely mean that your daily bounce is finished. And at that point, guys, your crucial area 131, if 131 can hold, can potentially set up for a daily trend change. If 131 flushes, will not be surprised, because that is the most likely scenario. The size of the bounces were crucial, and unfortunately, bulls not able to put in that big of a bounce yet. We'll see how the next few days play out there, but I would like to see Amazon get back up to about 138 for me to be confident enough to say, okay, good potential at the higher lows. But if we just tomorrow and Wednesday, if we pull into these lows here, guys, expect there to be further downside. Expect the gap to be filled eventually at 130 as well. But Amazon on the weekly, still decent space to work with here. 126 for your weekly higher low. Now let's go down to Google. Right, so Google, same situation as the rest, right? Nice little green day on Google, but Google still trapped in a very tight range here above your massive support level. 128 is going to be the line in the sand level, guys. If we lose this low right here, 127.12, well, your daily downtrend is going to be confirmed. At that point, I'd look for the gap fill right around 124 area. Google does have a lot of space to work with, though. Anything above 116 is just looking for your weekly higher low, and your 12 EMA is right down there as well, right? 124, 125, so keep an eye on that, guys. But Google bounce, right, kind of got its legs clipped from right under it today as well, with the massive pullback after the open here today. So we'll see what happens in the next few days. Google, I mean, it's one of two things, right? If we break 132.35, you have a very good chance of setting a daily uptrend. But if you break these lows here, it'll be daily downtrend confirmed and weekly consolidation continues. Very simple charts, guys. I'm not spending that much time on them today because it's doing everything we expected, right? Just look at the size of the bounces and you'll know the expected situation here. Meta, same thing, right? We were in a daily downtrend. What was I telling you guys to look out for? The size of the bounce, right? We got a decent little bounce going here, but Meta giving a lot of it back here today. So we'll see if Meta can hold this hourly uptrend. If we fail tomorrow and set the hourly downtrend, that'll be the end of your daily bounce, and we'll be coming back towards lows here. 274 is your crucial level. Nice little bounce on Meta. Not enough for me. I would have liked to see it come up absolutely up to 300 for me to be confident in saying, okay, Meta's created enough space that we may be able to set up for the daily trend change. But if we reverse tomorrow and Wednesday, guys, and come back here, well, we were always just looking for lower high, right? And daily downtrend continuation. At that point, weekly consolidation would be continuing here. right? Weekly consolidation. And we still have a lot of space on Meta to work with here, guys. My sweet spot, 230 all the way down to 200 pretty much, right? You can argue that this entire weekly move before previous consolidation, arguably the weekly higher low is 209, right? So tons of space for Meta to work with still. Microsoft having a very decent bounce, okay? Today, gap up open, we gave it back today, but what did we do, guys? Microsoft, we actually cracked our previous lower high, okay? 325, crucial area. We cracked it a little bit, so the bulls did engulf this entire most recent bear leg. So that's what you want to see, guys. They've now created a decent amount of space. Not going to say excellent. Excellent would be up here, right? But we've now created a decent amount of space. Next 2 days are crucial for this market. Decent amount of space to where, when we come back here, can we set the daily higher low, right? And reverse these daily downtrends into daily uptrends? Or are we just going to get further daily downtrend continuation if we break 312? And that will just be your weekly consolidation is not finished, right? My sweet zone on Microsoft quickly approaching, right? 307 all the way down to 285. I will definitely be looking at Microsoft if we get there. Next 2 days on the market, crucial, but I do like the size of this bounce to start out for. Just not enough information for me to call it either way right now. NVIDIA here at the tops, right? So NVIDIA, you can't really ask the bulls too much, right? They had a great open this morning, but unfortunately we did give it back, right? Great gap up open, guys, but we've come up so much, guys. If you look from the bottom here, right? This is like a 19% move in only a few days, right? Massive move on NVIDIA. So it was bound to give some back at a certain point, right? But what I do like is I like how much space the bulls do have, right? So it's still a daily higher low. Anything above 417 is going to be a daily higher low. So if earnings come down, I need to see them hold this, guys. If we flush this because earnings are bad for some reason, then you're looking back to your 404 level. 404, I'll remind you, absolutely crucial weekly level. If we flush this with earnings, well, it'll be this candle. If we flush this with earnings, guys, your monthly consolidation will be started. So just keep that in mind. We're going to do two things tomorrow, guys. We're either going to potentially come down here and retest and maybe lose our weekly uptrend, or we're just going to smash to new all-time highs and then all our fears go away on NVIDIA. We're going to be working with new levels, and at that point, there'll be a lot of space above this 404 to work with, right? So crucial day tomorrow on NVIDIA. Can't say it's going to, I can even guess where it's going to go, guys. I'm not playing it at all. We're just going to wait to see how it happens, and it's going to have a big impact on the market. That's why the next 2 days for this market are absolutely key to continue these bounces or potentially just roll to lower lows. Tesla, same thing, right? Juicy bounce from Tesla since Friday, right? Up almost 12, 13%, right, from the low. So you can't ask the bulls too much. Nice gap up open today, but then bears filling the gap for the entire rest of the day. But nice. Hourly uptrend is still a thing. But tomorrow, if we lose this and it comes into an hourly downtrend, you will know that your daily bounce is pretty much topped up, and we'll be looking. They've created a lot of space, guys. Anything above 212 pretty much is going to be looking for a daily higher low. So Tesla, I like the size of this bounce. You remember me saying yesterday in the video, I want to see them get up at least to 240. Well, that's what we got today, right? 251 is the actual level, but the bulls taking back a decent amount of this move, guys. A decent amount. Enough to create the space to potential reset of the daily uptrend to the bulls. So the next few days on Tesla will be crucial, guys. If we pull back too much into this move, well, then the bears will just remain their control. No one will be surprised, and we'll still just be in our weekly consolidation, and as a byproduct, monthly consolidation as well. My sweet spot is still down here, guys. So I'm now looking, can the bulls set the daily higher low? If they continue rising tomorrow and Wednesday, perhaps, and we get close to 251, then I would argue that it's very likely that when we pull back, we will get a daily higher low for a potential trend change. But as of now, Tesla, one of the better names in terms of space creation, right? Tesla, Microsoft, I like them for the space that they've created. Very good job. Palantir doing absolutely nothing, right? So we're just looking for a lower high, anything below 1583. Lower high for potential daily downtrend continuation. Size of the bounce, not too bad, right? We were looking for about 1586. So we did get up fairly high, not quite to the 12 EMA here. Next few days, guys, crucial. We've had a lot of these bounces in the past, guys. So now it's time for the bulls to prove it. Do they want to reverse the daily trend changes, or are we just going to go into further weekly consolidation? At that point, 1360, guys, that was a terrible line. 1360 is going to be your crucial area to maintain for the bulls, right? So Palantir taking it one day at a time until the bulls can reverse the daily uptrends. PayPal, nice bounce as well, guys. Previous lower high, 63.35. So the bulls putting in a lot of work here. I'd like to see them get up to this 12 EMA. If they can create enough space here off of our 57.35 low, it'll be very decent for a potential daily trend change. So I like PayPal going against the market, up 2.5% when the rest of the market, a lot of the market was red today. So very good job by our PayPal bulls here, creating decent enough space here. Look, off the lows here, guys, we now have about 6.5% roughly to work with. So that's a decent amount, right? So hourly trend changes are in our favor now. Hourly uptrend is confirmed. We are keeping it, right? So we'll try to ride this 12 EMA. 4-hour chart does look good, still not looking like it is topped out, and created a lot of space on the daily. When we pull back, I'm going to be looking for the higher low for the daily trend change. But as of now, PayPal with a very decent bounce, all things considered, right? Very good job by the bulls. And that's pretty much it for our big tech list, guys. If you want to know a few stocks that I'm looking at to add to the portfolio, we'll go over some now. Vici. If you don't know this one, it is a REIT, right? So this level is a crucial level. I like Vici right now, around $30. Very good valuation. If you guys don't know, this is the landlord for the MGM suite of hotels and resorts. They pay a very healthy dividend, and their chart is absolutely beautiful. It's very tough for them to lose money. I talked about it earlier in the video. People are paying for experiences and travel nowadays more than goods. And these, all they do is they are the landlord for casinos and a few golf courses, right? So you guys know that this has been a very, very hot market for that recently. Vici, in my opinion, represents very, very, very good risk to reward at the $30 range. I like it a lot. So looking to pick up a few shares if it does stay down here. The second one is Louis Vuitton. Louis Vuitton, a play that I don't bring up much because I don't want you guys to steal it. But Louis Vuitton now coming into our previous resistance, previous support area. I like Louis Vuitton, especially coming into a potential recession. Rich people do not lose money, and they do not stop spending money throughout a recession. Louis Vuitton's price to earnings ratio is 25. Despite the fact that this thing is absolutely mooned, its price to earnings ratio is only 25, which is very, very, very good in terms of comparatively to industry standard. They are a conglomerate, and you can see, guys, all they do is absolutely print money every single year. This is one of my favorite stocks in the entire stock market for the next 5 years. Coming down to a juicy level for me. If I can get this thing in the 160, I will continue to add shares. Full disclaimer, my first position in this was around $137 mark last year, right? So looking good, but I am looking to add as this chart is looking very healthy. Currently just under monthly consolidation, and I do believe that this thing will outperform the market for the next 2, 3, 4, 5 years, even in the midst of a recession. Another one here to look out for, guys, is public storage. Public storage has been one that I've started a position on just a few weeks ago. I am looking to build a larger position, but I really like this weekly consolidation that we're in right now. We're really hovering around a lot of our long-term moving averages. If you guys can see, this thing absolutely prints money on the long term. Yes, we are in a bit of a monthly consolidation right now. It had a massive run after 2020, 2021. Obviously, it's public storage. That is to be absolutely expected, but we're really holding this resistance area nicely around the $270 mark, which is previous all-time high resistance, right? Which is now acting as good support for the better part of the last year, I would say at this point, right? They pay a very nice dividend as well. They have a very low price to earnings ratio. And if you see their last 5 years, right, revenue is very, very, very solid. And their profit margins are absolutely ridiculous, right? Not a lot of overhead. They really don't have to do anything, and they just continue to collect rent. So those are 3 stocks that, in my opinion, are going to do very, very, very well during a potential recessionary period. They're more value plays. They're not so much oriented towards growth, although Louis Vuitton has a bit of that. But there are 3 things that I think will do very well in a recession. So with all that being said, guys, I hope you enjoyed the video. If you did enjoy the video, consider liking it. If you're new to the channel, consider subscribing. Appreciate all your guys' engagement as usual. And as always, guys, if you have a question, feel free to ask me down in the comments. I answer people's questions pretty much every single day. If you have a stock that I want to look at, my opinion on anything, options, you guys can throw it at me and I'll be glad to answer, guys. All right. So take care, guys. We'll see you guys after the close tomorrow. NVIDIA earnings. If you're going to play it, be very, 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 very careful. All right. Take care, guys. Peace.